Welcome to Strategy Saturday. I'm Charles Crillo, and today we're going to be discussing how to find real estate syndication deals. Have you always wanted to invest in real estate, but didn't have the time, didn't know where to find the deals, couldn't get the funding, and didn't want tenants calling you? Since 2006, I've been buying income-producing properties in great locations that provide us with consistent passive income while we wait for appreciation in the future and take advantage of tax laws while we're waiting. And unlike your financial advisor, we invest alongside our investors in every property we purchase. Check out investwithharborside.com. If you like the idea of investing in real estate, if you like the idea of passive income, partner with us at investwithharborside.com. That's investwithharborside.com. When I speak to a new investor who is looking for real estate syndication deals to invest in, I try to guide them instead towards finding and interviewing sponsors first. Once a potential investor has successfully interviewed and vetted a sponsor, a major piece of due diligence has now been completed. So when a new deal becomes available, the investor is now primarily focused on reviewing the deal, not spending time reviewing the deal and the sponsor. Every time we send out a new syndication deal to our investors, there will be at least a couple potential investors who are now trying to vet our company and the deal at the same time. Not that there's an issue with this approach, but once a deal goes out, we will have dozens of soft commitments coming in and calls being set up by prospective investors whom we need to speak with to answer any of their questions as well. The new investors who have already vetted us have an advantage since they are able to finalize their investment before our raise is filled. The first step is determining what type of investor you are. Are you an accredited or sophisticated investor? So what is an accredited investor? Well, an accredited investor is someone that earns $200,000 per year or $300,000 a year with their spouse in each of the last 2 years and reasonably expects the same for the current year, or has a net worth of $1 million, excluding the value of the person's primary residence. Or they can hold in good standing a Series 7, 65, or 82 license. Now, on the other hand, a sophisticated investor is a sophisticated person or a non-accredited person, means the person must have sufficient knowledge and experience in financial and business matters to evaluate the merits and risks of a prospective investment. Once you've determined your accreditation status, next you can begin to search out syndication sponsors. Now, accredited investors will have the ability to invest in all real estate syndication deals. Accredited deals are typically advertised online, on social media as well, and they will state that this is a 506C offering. In other words, a deal only for accredited investors. Deals for sophisticated and accredited investors will be denoted as 506B deals. But you will not see these deals advertised anywhere since it is against SEC rules to advertise 506B deals. To find these deals, you need to begin a relationship with a sponsor who offers 506B deals. Once you have a relationship with them, they will send you out 506B deals as they do them, and they'll send out as well to the rest of their email list. So where do you find sponsors? Well, you can find sponsors all over the internet. Online forums, podcasts, social media, crowdfunding websites, local meetups, networking with other investors, and real estate investing events. I personally have never invested in any real estate deals through a crowdfunding platform. I prefer to build my relationship with sponsors for passive investing, or if we're going to partner together on a deal as co-sponsors, mainly one-on-one after I've researched them. As you're finding sponsors, I would set up some sort of sheet that allows you to easily track their firm, the types of deals they do, whether they're 506 or 506B or 506C deals or both, and what types of properties they focus on, multifamily, self-storage, mobile home, and the other information you find relevant. I track and reach out to sponsors that I feel are solid, even if I'm not planning to invest in their asset class any time in the near future. I like to see what sponsors are doing, what they are changing, how they're editing their business plans with the new market, refocusing their niche to deal with the markets and the overall economy. Make sure to track sponsors who do both accredited and non-accredited deals, even if you're only a sophisticated investor at this time, because one day you'll be an accredited investor. You now know what the type of investor you are. You have a list of potential sponsors, and I would start getting on some mailing lists. Maybe start with the favorites that you like the most and go from there. And I would start listening to their podcast or YouTube channel if they have one, while also searching up podcasts where one of the partners is being interviewed. Usually there is one partner who leads in content creation and does interviews on other shows. For our firm, this would be me. And you'll learn a bunch of valuable information from their mailing lists and from the podcast they are on. And the next step is really making actual contact with the sponsor and setting up a call. One side note is that most firms that do 506B deals for accredited and sophisticated investors alike, might not advertise on their website, and you really need to reach out to them and verify that they do offer these deals. After you've connected with some sponsors, the interview process begins. Schedule calls with different sponsors and start asking questions. I'm not going to go through how to fully vet a sponsor in this episode. We have a number of Strategy Saturday episodes on evaluating deals and sponsors, what happens after you invest in syndication, etc. But what I want to talk about is a few things I would focus on in the first call versus other less important factors. I always feel that discussing fees in syndication structures is kind of a waste of time for us. Like other sponsors, each deal is different, and some deals have lower fees than others. It all really depends. And when fees are brought up right away on a call, you kind of now wonder if this investor is going to be the one that's going to complain about every fee that's charged, especially the acquisition fee, which we know is a larger fee that's charged to investors. However, this is really justified by we going through 100 to 150 deals before actually doing one deal. So another less important factors that comes up sometimes on calls is splits. And I was recently on a call and the potential investor asked if the split readjusts after the deal hits a 20% annual return. Now, honestly, if a deal you're investing in hits a 20% annual return, does it really matter if you're now receiving 50% of that or 70% above that number? I'm more concerned with not losing my investment and how fast I can recoup the majority of my capital, not if a deal that has a gross annual return of 25% pays me a net return of 17% or 20%. When you're on the call, sponsors request that they send you over some of their previous deal offerings. We usually send out 4 or 5 previous deal offerings, which will allow you to drill down into the details. You will now see their usual fees, splits, etc. I would rather pay higher fees or receive a low return to know that my principal is safer. So by going through, you can see exactly how they structure it, what their loan to values are, and how they value all their different fees and how they usually structure out the preferred returns and everything like that. That really is more difficult when spoken about on the phone to understand. What I want to talk about is the partners and their business and the real estate investing experience that they have. Syndication experience is important, but I want to know that they've been investing in their focused asset class for 15 plus years. Now, the goal of the first call is really to start the conversation. Find out a little about the partners, their business plan, and what makes them different. Their experience, what types of deals they do, and how often they are closing deals. I also want to know really what their team looks like. All the different positions that they have, what they handle in-house, kind of what their payroll looks like. You can kind of see that from looking at what their team is. After the call, review the information they send out and make a list of new questions for the next call or email. So I hope you enjoyed. Please remember to rate, review, subscribe, submit comments and potential show topics at globalinvestorspodcast.com. If you're interested in actively investing in real estate, please check out our courses and mentoring programs at syndicationsuperstars.com. That is syndicationsuperstars.com. Look forward to 2 more episodes next week. See you then.
Nothing in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this podcast are limited to accredited investors. Any investments will only be made with proper disclosure, subscription documentation, and are subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Syndication Superstars, LLC exclusively.